Good afternoon, Gaurav. It's a pleasure to have you again on our EGM Securities Update. Gaurav, there is so much going on at the moment, and I saw today we had a big lurch lower in the euro. Tell us what you're seeing and what you're thinking here.
Well, yes, Ali Khan, we've seen the euro drop to about 2-month lows against the US dollar, and now we see that euro USD symbol trading at 1.14 levels. Look, the underlying fundamentals for the euro haven't changed. Earlier in the week, we had dropping Italian government yields, which had come down, and that saw an initial buying spike, helping the euro higher. But overall, this Italy and EU row with regards to the Italian fiscal budget is really what's weighing down euro prospects, and which is why we're seeing it trading at that 1.14 level. Look, I wouldn't be surprised if we see a test of that 1.13 level in the next 1 week ahead. This is a combination for a couple of different factors. Of course, tomorrow we have the European Central Bank rate decision. They're not expecting to change rates, but we could come out and see a bit more dovish ECB President Mario Draghi. Remember, they had wound down a lot of their asset purchases, which are expected to be completed by December. But again, there could be some sticky topics with regards to Italy coming up in that meeting, and President Draghi could very, very easily have a more dovish stance, which could see weakness coming into the euro. Also, I'm expecting a little bit more euro USD weakness in that particular symbol, euro against the US dollar, because of a strengthening US dollar overall. We're seeing the US dollar index consolidating above 96.30 levels at present, and I really wouldn't be surprised if we see it moving up towards 97 in the lead up to those all-important US midterm elections, which kick off on the 6th of November.
And do you think those midterm elections carry a risk for the dollar at this point in time? Or do you think, the dollar's story is so overwhelming that really, unless we get a real curveball, it's not going to make any difference?
That's a fantastic question, Ali Khan. Actually, the picture that's coming out of the US is it's very, very mixed. Now, just last night, President Trump told the Wall Street Journal how he wasn't happy with his appointed Fed Chairman Powell and his aggressiveness towards US rate hikes. So Trump is coming out with a very, very strong and aggressive stance with regards to future US rate hikes. And he's clearly not happy with this current channel between 2.25 and 2.5% US interest rates. So what kind of message is this sending? But overall, I think in the lead up to those elections, we should see a better bought US dollar. Again, the fundamentals that I would tell our traders out there is look at the US data docket. An improving US data docket is going to continue to lend support in the US dollar index. We have stronger US data that's going to directly translate into a stronger greenback, and that is because of the interest rate play as a result of the FOMC's recent actions. Having said that, these midterm elections are going to be very, very tricky. It's very, very difficult, as we've seen in past history, to predict the outcome of such high-risk events. But overall, I expect to see, if we do see a situation whereby the Republicans can somehow garner the majority in the lower house, the House of Representatives, as well as the Senate, I think this will continue to see a stronger trend for the US dollar through the end of 2018 and into 2019. So I would actually wait to see how those results pan out. But overall, I think the US dollar is continuing to be primed for more upsides through the months ahead.
Is there anything else you'd like to touch on, Gaurav, today?
Yes, Ali Khan, we are also watching for the Bank of Canada's rate decision that's due out later today at the start of the US session. I would tell traders to look out for that USDCAD symbol, the US dollar against the Canadian dollar. We are expecting to see a rate hike up to 1.75%. Now, while this may be largely factored into the price of the USDCAD, we await to see what the Bank of Canada's accompanying a statement would be. Now remember, Canada is kind of in a mixed scenario right now. The economic numbers have been pointing to a somewhat strong recovery. So if we come out with a more hawkish Bank of Canada rate decision, then this could lead to further upsides in the Canadian dollar. So I would wait for traders to wait for that announcement before they look at building some long positions. Finally, also, I'm watching for the US GDP print, which is due out on Friday. Unfortunately, I don't have the pleasure of speaking to you until that's released. So we will be catching up on Monday on how that's released. But watch that figure, Ali Khan. If we see a reading of 3.3% or higher, again, this would continue to lend support for dollar bulls. So keep an eye out for the data docket and, of course, the all-important midterm elections in the following fortnight.
Always a pleasure, Gaurav. And obviously, you're going with the king dollar, strong dollar story here, I think, on balance, right? And the ways to play that and probably buy the dollar on any pullback seems to me what you're saying.
Absolutely, Ali Khan. And the reason for that is very, very simple. I always tell traders that, look, in this current environment amidst low interest rates, we don't have an aggressive ECB hiking rates. The Bank of England went through a couple of rate hikes before pausing. We don't know what's going to happen with regards to those Brexit votes, so they are not in any position to hike rates. So overall, it's coming down to that interest rate play. So as the US central bank remains the leader in those rate hikes, this will continue to create the disparity in interest rates, and this should continue to see the US dollar being well bought.
Thank you very much, as always, Gaurav, for the insights into what's happening and really giving us good calls to action. Thank you so much.
Thank you, Ali Khan. Have a great day.
You too.